Good day, Mr. Hamon. My name is Maria Angelica Delfin. I am 3.2 BSBA FM and I am from Group 1. In this presentation, I will be discuss the 5 problems and the solutions about the continuation of owner's equity. The first problem is ANGB Corporation is currently experiencing a quasi-reorganization. The fair value of asset is 800,000 pesos and the liabilities are 400,000 pesos. Determine the fresh start surplus. So first, the fresh start surplus represent the excess of fair value over liabilities. In this case, the quasi-reorganization creates a surplus of 400,000 pesos, indicating the amount available for a fresh start in the financial statements. So here is the solution. To get the fresh start surplus or the owner's equity is simply subtract the fair value of assets to fair value of liabilities. So, 800,000 pesos minus 400,000 pesos is equal to 400,000 pesos, and that is the total of fresh start surplus or the owner's equity. So, let's proceed to the problem number 2. A Incorporated has provided stock options to its executive as a component of postponed compensation. These options allow the executives to purchase 1,000 shares at a price of 50 pesos per share. If the current market value is 60 pesos, determine the stock option cost. The stock option cost reflects the increase in the market value of the stock above the exercise price multiplied by the number of options granted. This expense is recognized over the vesting period. Here is the solution. To get the stock option expense, you need to subtract the market price to the exercise price and multiply by the number of options, which means 60 pesos minus 50 pesos times 1,000. Is equal to 10,000 pesos, and that is the total of stock options expense. The third problem is BLSSM Corporation, which has an Employee Stock Ownership Plan or ESOP, aims to make a contribution to the plan. Given that the company yearly earnings amount to 500,000 pesos and the contribution rate is 5%, compute the annual contribution to the ESOP. So here is the solution. To get the ESOP annual contribution, you need to multiply the annual profit to contribution rate, which means 500,000 pesos times 0.05 is equal to 25,000 pesos. And that is the total of ESOP annual contribution. The fourth problem is Bait Incorporated repurchased 1,000 shares of its own stock at 30 pesos per share. Determine the effect of stockholders' equity considering that the initial issuance price was 25 pesos per share. The adjustment to stockholders' equity reflects the difference between the repurchase price and the original issuance price multiplied by the number of shares repurchased. So here is the solution. To get the adjustment to stockholders' equity, you need to subtract the repurchase price to original issuance price and multiply by the number of shares, which means 30 pesos minus 25 pesos times 1,000 is equal to 5,000 pesos, and that is the total of adjustment to a stockholders' equity. So let's proceed to the last problem. A sole proprietorship has an owner initial investment of 50,000 pesos and return earnings of 20,000 pesos. Calculate the total capital of an incorporated firm. In an incorporated firm, stockholders' equity is term capital. The total capital is the sum of the owner's initial investment and retained earnings representing the owner's claim of the firm assets. So here is the solution. To get the total capital, you need to simply add the owner's initial investment to retained earnings, which means 50,000 pesos plus 20,000 pesos is equal to 70,000 pesos, and that is the total of the capital. And this will be the end of my presentation. A warm thank you to all of you.